Hi, everyone. Welcome to our How Risky is Cybersecurity Insurance briefing we're going to do here today. I'm John Pescatori with the SANS Institute.
And I'm Ben Wright. I'm a lawyer in Texas, and I teach Legal 523 Law of Data Security and Investigations course at SANS.
So cybersecurity insurance has certainly been in the news recently. A lot of ransomware attacks you see on your screen have tended to drag it in. But cybersecurity insurance has been an issue for a long time. I've been at SANS 8 years. Before that at Gartner, I think it was as far back as 2005 when I was working in things related to cyber insurance and the major carriers. So our goal here, Ben and my goal for this session, like all SANS training, is to give you some information and some background and some things you can do so when you get back to work, you can be an informed player. You can work with your company making the decisions on when cybersecurity does or does not make sense and how it relates to the cybersecurity program and what you can do to sort of minimize the risk to your company overall, both the risk of attackers causing impact to your business, but also the risk of cyber insurance being prohibitively expensive based on the status of your security program. So with that, let's get started.
So one of the key stakeholders who is interested in cyber insurance at an enterprise like a business is the financial community. When I say financial community with respect to a business, I mean investors like shareholders, I mean lenders like banks, and I mean board of directors. And these stakeholders are not very capable of evaluating security. However, they understand insurance. With insurance, an institution does some kind of a review, which it calls underwriting. It evaluates the cyber hygiene at the business, and it makes a decision. Okay, I'm going to take this risk. I'm going to put money on the table to take that risk. From the point of view of the financial community, that's impactful that the insurance company would say that it will put its own money on the table to take the risk with respect to some kind of a cyber event. And so cyber insurance can cover many different kinds of losses or expenses. Cyber insurance often covers losses like business interruption. Oftentimes, cyber insurance comes with services. So those services can include forensics, it can include incident response. And today, increasingly, cyber insurance covers ransomware explicitly and provides for the negotiation of ransomware as well as payment of the ransom. The kinds of coverages known in insurance include what's called first-party coverage and third-party coverage. First-party coverage means the kinds of expenses or losses that the insured enterprise incurs directly, such as business interruption. Third-party losses means covering some kind of an expense that comes from a third party. An example would be a regulator imposing a fine on a business who has suffered some kind of cyber crisis. An important kind of insurance in this field as we think about ransomware is traditional property and casualty insurance that's sold to businesses and enterprises. So property and casualty insurance traditionally covers a lot of different property losses as well as extortion. And up until recently, a lot of the insurance companies were interpreting their traditional property and casualty policies to cover ransomware. However, NotPetya was so damaging to the insurance industry that the insurance industry has changed its mind. So the insurance industry says that it lost globally $2.7 billion because of NotPetya. And they decided that NotPetya has demonstrated to us that ransomware is a whole new ball game and it's not traditional damage to property and extortion. So increasingly, insurance companies are changing their policies, and they're changing the policy as they renew an existing policy to explicitly carve out ransomware and say ransomware is not covered by traditional property and casualty. If you want ransomware coverage, you have to buy it specifically as a special rider or a special policy and pay for it specially.
So Ben's just talked a lot about the sort of benefits that come with cyber insurance. We want you also to be aware of the costs. And there's two types of costs. One is what you pay for the policy. So if you ever got to a restaurant and felt like having a nice lobster dinner, you probably saw the menu say market priced, because who knows how many lobsters they caught that day or that time of month or that year. You can see the pricing is really variable in what lobsters cost, and on a day-to-day basis it can fluctuate wildly. That's market pricing. When there's not stable dynamics in a market, we have market pricing, and the prices change every day. That's sort of what the case is for cyber insurance. It's essentially market priced. I tried to pull together some data points in late 2020 and the first quarter of 2021. And the five you see on there, the documented public ones I could find. I'm going to walk through a couple of case studies later. We'll do a little drill down in sort of similar space. But you see here, this has two smaller companies, sort of the lower left of this curve, that had $1 million and $2 million policies that were only in the $15,000 to $30,000 range for that amount of coverage. And then you see to the far right, larger companies that had bigger policy coverages of 10 million. And you see the dots are spaced out. You see the one dot in the middle, which was sort of a medium-sized company. And using my advanced machine learning skills and doing curve fitting, I drew that red line, which if you take that red line is one of two things. If you take that red line where it is, we end up with on the range of 12.5K per million. But if you see that arrow, that's where the prices have gone at the high end here more recently. And you'll see in one of the examples I use later, much higher for large companies. As Ben mentioned, NotPetya hit some really large companies with $300 million plus exposures of several, at least two of them that were made public. And larger companies generally have more computers that get hit. It's more expensive to remediate. They have larger customer counts, so the costs are astronomical for these incidents that really sweep across a big company, either disrupting its revenue or impacting tens of millions of customers, or in real cases, hundreds of millions of customers. So the out-of-pocket cost in two things is kind of unpredictable, stabilizing a little bit here over the past couple of years, but it's not insignificant for large companies. For small companies, it may be sort of simple. Let's do it. Let's hope it's like backing up our hard drive. If we back up the hard drive, the computer never crashes. If we get insurance, we'll never need it. At small companies. At large companies, it's a significant expense, and it's a decision to divert company resources towards paying the bill for insurance. And you're going to see Ben and I harp on a couple of things here throughout this. One key thing I always bring up is spending on cyber insurance doesn't reduce anything the security program has to do. We still have to do all the same security things to protect the company. The spending on cybersecurity insurance does not replace any of that. So that's sort of the out-of-pocket costs. Let Ben drill down on sort of the impacts and costs to the security team.
So one of the really important things for a security team to bear in mind as it's working with insurance is tell the truth. Now, that's kind of odd. The lawyer says, tell the truth. That's so obvious. But telling the truth to an insurance company with respect to a very complex technical topic like cybersecurity can be a challenge. And so during the review process before issuing the policy, the insurance company goes through what it calls underwriting, and it may give you a questionnaire. It may send someone to come and talk to you and audit you and so on. And if the insurance company believes later, after you have a crisis like ransomware, that you didn't tell the truth during the underwriting process, then the insurance company may deny coverage, or it may reduce coverage. Another place where this need for telling the truth happens is during the incident itself, as you're interacting, you're interfacing with the insurance company and with its people and its investigators. You want to be making sure I really am telling the full details here rather than just a cursory overview or something that we didn't review very carefully. And so it can be easy in the heat of the moment not to be really careful about what you say to the cyber insurance company about what we were doing or what was breached or how the breach happened or so on. And therefore, the security team needs to be thinking carefully about how do we choose our words when we answer questions from the insurance company. So, for example, the insurance company may say something like, do you install patches normally within 30 days? And it might be easy because you're busy to just say yes. But the truth is, maybe it's really a lot more complex process in your organization, and maybe a more accurate statement is that you have a professional team that reviews patches and then goes through a risk assessment and then makes decisions based on a responsible review of a risk assessment. Maybe something like that is a more accurate statement than just quickly saying, yes, we normally install patches within 30 days. Another practical aspect of involving a cyber insurer in a ransomware event is that the insurance company comes with people. People start getting involved with your incident, and particularly in a ransomware event, the insurer's staff gets directly involved in answering a technical problem. And that technical problem is, are we going to pay ransom or are we not going to pay ransom? And so there's a hinge point there, a pivot point for the enterprise, and therefore the security team and executive management has to be working with these different people who are helping the insurance company make decisions. And so other people that might be involved from the insurance company's team could include the insurance company's own investigators, as well as a payment compliance expert. We'll talk in a couple of minutes about why this payment compliance expert needs to be involved. But there's quite a number of people who might be new and extra that you have to deal with in an incident response. And actually, the fact that so many new people have to participate in incident response could actually detract from the value of having insurance, because incident response just becomes more of a bureaucratic process than it would be without the insurance company there in a ransomware event.
So I think Ben brought out an important point here. Many mature security programs have playbooks for incident response to be able to do things in a repeatable way and keep them updated. And many security programs learn to have a communications playbook, how to deal with the press, how to deal with corporate marketing and communications, and who needs to make decisions along the way about communicating an incident. I think it's almost like you need to have a playbook like this for dealing with the insurance companies each year when they're doing these type of audits to make sure you're doing the right thing. Because if you think about it, a inaccurate answer may or may not cause them to deny you insurance, but it could cause them to deny you payment afterwards if they find out it was this not accurate response. So playbooks for this, or incident response playbooks including this, I think is a great point. So let's do a little drill down on ransomware in particular now. So it certainly seemed really different when ransomware broke in. It was really back almost 10 years ago now when we first started to see them. It was pretty much a denial of service attack, right? They would capture your files and maybe your executables, and essentially you could not do business. But it also included this very sexy thing, a ransom, an extortion demand, which immediately caused chief legal counsels and others to say, wait a minute, we have coverage. If one of our executives is kidnapped, we have ransom coverage. Also, denial of service, we may be one of the companies, we know what our downtime costs. When the manufacturing line's down, when we can't deliver the packages or ship the goods, we have a good handle on cost of downtime versus breaches, which were, well, what is the real cost if our customer information gets out? So since ransomware was kind of exciting and included this sexy stuff about ransom and encryption, and Bitcoin was floating around in there, got a lot of press coverage and sort of caused a lot of interest in this. Well, insurance will pay for all that. And as Ben said, that's already starting to change. One key thing, one of the compliance regimes, HIPAA, the Healthcare Information Portability and Accountability Act in the US, early on said ransomware counts as a breach. Because if you lost control of people's personal health information such that the attackers could encrypt it It was breach. You lost control of it just because they chose not to expose it doesn't change the fact that you lost control of it. And that's what the regulations say. Now, many more compliance regimes are starting to have that same interpretation. Basically, if the attackers could get the critical data and encrypt it, they could also breach it. And increasingly today, we're seeing them do both. In the past 6 to 9 months, or really most of 2020, and 2021, most of the ransomware attacks, if you said we're not paying, they started exposing your information. Or you might have paid for it and they got them running again. Then they said, well, now you need to pay so we don't expose the information. So the bottom line is ransomware attacks are just the same as breaches, from how expensive they can be, how complicated they can be, and how they really need to be avoided versus hope that something's going to pay for it all. So that's just a sort of ransomware did bring some unique aspects, but in reality, it's just another malware or security incident.
So a common comment I hear from professional incident responders on ransomware is that the insured enterprise oftentimes is surprised once they get into the incident, exactly what does their insurance cover and what does it not cover. And that motivates the security team as well as executives to think about all of this in advance and try to understand what coverage do we actually have, so that we're not surprised when we're in the heat of the incident. There are stories where the negotiations between the insurance company and the insured enterprise can be kind of surprising and testy over whether to pay ransom or whether not to pay ransom. So the insurance company oftentimes has a policy that says, we will pay a ransom, but we'll also pay for the cost of business interruption. And the insurance company can decide the ransom is likely to be lower than the cost of business interruption if the enterprise tries to recover from backup. And therefore, there are stories of insurance companies putting pressure on the insured enterprise to go ahead and pay the ransom. Now, the insurance companies will make very clear that the final decision whether to pay ransom lies with the insured enterprise. Nevertheless, the insurance company is looking at, that ransom payment, I think I can negotiate that down to something that's not that large, and that's going to be a lot less than all the business interruption of trying to recover from a backup or some other kind of recovery. And so the insurance company might gently say something like, you've got $1 million of coverage for recovering for business interruption, but I think you made some mistakes, and I think that's why you suffered ransomware. And so I'm going to argue you're not entitled to so much coverage for business interruption, and therefore you better just go ahead and agree to pay the ransomware and let me reimburse you for that. And that might not be in the best interest or desires of the insured enterprise. The insured enterprise may not want to pay ransom. It may not like the publicity of paying ransom. It may not like the politics or the morality of paying ransom, but the insurance company may have a little different priority, and that may come as a surprise to the insured enterprise. Another complexity around paying ransom is the United States Treasury Department has recently re-emphasized something that the insurance companies have always known, but there's now more scrutiny on that. And that is that there are many organizations like terrorist organizations and known hacker groups who have been sanctioned by the United States government. And when the government imposes sanctions, it says an American business, like the insured enterprise, like the insurance company, may not do business with these sanctioned entities. And therefore, before the insurance company can participate in the payment of ransom, it has to check with the Office of Foreign Asset Control with the United States Treasury, see if they can figure out who they're doing business with, who they're going to try to pay the ransom to, and whether that party is on the disfavored sanctioned parties list. That's a difficult and challenging type of problem. It raises an additional layer of, in effect, red tape for reaching the final conclusion that we're going to pay a ransomware. From the security team's perspective, it means, we need to be working multiple layers of a resolution to this at the same time. Maybe we're going to pay ransom, but maybe the insurance company will have to pull out at the last minute. Maybe we will recover from backup or something else.
So yeah, some of this reminds me back to lobsters and market pricing, because less than a year before that OFAC advisory, the FBI had actually come out and said, well, it's up to the business to make the risk decision about paying off or not. Whereas for decades, standard law enforcement advice was do not pay kidnappers, do not pay them off. So the guidance at the top and the law enforcement part is changing about as rapidly as the pricing. So let me do drill down on some case studies here that I picked out, and I tried to do a little bit of numerical analysis on. So the first one is a small company, less than 500 employees in that revenue range you see there. They had a phishing attack where one of their users fell for a phishing email, even though they did the usual phish training and all that good stuff. And that person got their PC compromised. The bad guys had control of it. They were able to go through that person's email, and they found a spreadsheet. And that spreadsheet had the personal information of 28,000 customers. Didn't have credit card numbers or bank numbers. Wasn't really one of those type of financial incidents, but it had telephone number, company, all kinds of information that could be used for all kinds of fraud. And this company took it seriously, their obligation to their customers, so they really wanted to go fully in protecting their customers. Now, it turns out this small company did have a cyber insurance policy. It was $2 million in coverage with a $25,000 deductible that cost them $14,000 when they paid it. As they cleaned up this incident and notified customers and did everything, they had about a little under $1.5 million, $1.4 million of invoiceable costs, charges from third-party consultant firms or other things where they had hard costs where they had to spend money. But they had roughly equal to that, if not a little more, of internal costs of people's time and other things that had to be done to clean up and mitigate the cost to make sure this could not happen again. And let me repeat that. Part of the cost of an incident is making sure it doesn't happen again. It's not, oh, good, the next time it happens, we'll get paid again. So when you look at this particular choice for this small company, they spent about $3 million. The damage was $3 million. The deductible was $25,000. There was a $14K premium. So they essentially spent $3.039 million, and they could have gotten back $1.4 million. They still would have a cost exposure of over $1.6 million after this, even after paying insurance. This company actually decided not to make a claim. They felt that they should have protected themselves against this anyway. They also were afraid their insurance would get canceled, and if something else happened, they'd be covered. So they actually did not even make a claim here, which many of us, I have a daughter who made me be very friendly with auto repair companies, and many times I didn't make a claim when she smashed into things. So what I used to do at Gartner, and I did here, was try to estimate, okay, how much would it have cost you to avoid this? So in this case, it turns out they were using Outlook 365, and there had been an update in the critical security controls, or what are called the templates, for how to do Outlook 365 securely. In this case, what the bad guys did was insert a forwarding rule in this person's email. So in the spreadsheet, when she sent it to the intended recipient, it also sent it to the bad guys, and she didn't notice. But there's ways to prevent external connections from changing those forwarding rules, basically, the equivalent of group policy objects. If they'd have done a pen test that would have found that path and found that they were behind in the latest guidance, they would have avoided this attack. And roughly, figure a couple of man-month or so and throw the cost in $125K and more than the cost of the policy for that year. But even with that cost, 1/10 of what it cost them to have that incident. Now, if they really wanted to go further and say, well, yeah, that was this incident, but there's other phishing attacks and ransomware attacks and things that don't use just forwarding rules and Office 365 things, we could easily close the holes around. But what if we went to two-factor authentication? So everybody for their email, it couldn't just be a reusable password. If somebody got phished and the attacker now had their password, with two-factor authentication, we'd be safe. Well, we all know that's more expensive. It's not that expensive for small companies from a hardware point of view and installation point of view. With cell phones, text messaging to cell phones, there's hardly any cost when you get right down to it. It's really annoying. This used to be, we can't get users to to do that. They'll never do that. They'll scream at us. The CEO will tell us to stop. Of course, most people at home are doing that for their bank accounts now, already, and they're doing it for PayPal, and they're doing it for Venmo, two-factor authentication. So it's not that hard to get done. That would have cost, I'm being a little optimistic at 150K, but say it would have been 250K. Still cheaper than what they spent on that first incident, and still, let's say it raised it up to 5 to 10 years of the premiums, yet they were protected forever. So there's a small company example, and sometimes it's easier to talk about solutions, cost to avoid, and things that don't scale. Let's look at a public one. This was a very public here in where I live. I'm in the Baltimore, Maryland area. So back in May of 2019, the city of Baltimore had a major ransomware event that shut them down completely. Schools and other parts across the city, and tax payment and traffic revenue and all that kind of stuff. It was over 10,000 computers. And the demand was for 13 Bitcoins. Where they get these numbers sometimes. Back then, a Bitcoin was worth a measly $5,000. Now Bitcoin, I meant to check before we did this what it's worth today, but when I did the slide, 13 Bitcoins was worth $650,000. That was the ransom demand. The city said, we don't pay no stinking ransom. They were not going to pay the ransom. So they suffered through the incident. It took weeks, several weeks to recover. Their hard cost estimates were, much of it was invoiceable because they did not have that much internal security expertise, that it cost them $10 million to get things back up and running and to mitigate the problems that enabled the ransomware demand. And then they came up with an estimate. Remember, there's a city, which, county/city in Maryland, Baltimore, that there was $8 million in lost or delayed revenue. Now, that's some of that you could point to hard costs. Some of it's delayed revenue. You might end up, well, we don't pay for delayed revenue, as Ben talked about. There's lots of exclusions and terminology and so on. But basically, they figured this cost them about $20 million, this incident. So the decision was made at the CIO level and at the state board of directors, of regents level and all that kind of stuff to obtain cyber insurance in case this was to happen again. So for 2020, for $800,000 with a $1 million deductible, they got the $20 million cyber insurance policy and had no problems that year. See, if you get insurance, it's like backing up your hard drive. Pay for the insurance, nothing bad happens. The next year, even though they'd had nothing bad happen the year before, lots of things that happened in 2020. So for 2021, the premium went up to $950,000, almost a 20% increase for the same amount of coverage and the same deductible. So notice that deductible, a $1 million deductible, you'd have to have a major incident for that for you to break that. And if you did all that mitigation beforehand, and if you're able to institutionalize, whether we went to two-factor authentication or we're going to do a pen test every year, and we're going to keep ourselves more secure, you start, looking at, well, how much would it have cost to totally avoid this and harden ourselves such that this particular level of attack, not saying you'd be invincible, but for this level of sophistication and this sort of phishing-driven attack, how could we avoid it? And my rough estimate, between $3 and $5 million, not insignificant for an agency this size, that many computers. So if you look at that, that's 3 to 5 years worth of payment of the premiums they're paying. So, I don't know about you, but I make a lot of my decisions on the payback period. If I make an investment, how long does it take to pay back the cost, whether it's, replacing a car or whatever. So in many of these things, you start seeing a 5-year payback period, 5-year or less payback period. You're going to start to be able to convince board of directors, no, we can do this, and this will be cheaper in the long run than obtaining this level of cyber insurance. Maybe obtain a lower level or something. But part of what we can do in security to avoid incidents has to be part of the discussion. We have to be able to provide that level of information and be part of the discussion around obtaining cyber insurance policies. So there's some other things to think about. There's not very good data out here on any of these. I've tried to collect this data for several years. It's hard. So to kind of think that, well, you pay and they could still go ahead and just keep your money or then do the breach. That seems to occur maybe 20%, 30% of the time at most. So paying generally in the majority of the time does preclude more damage, but not always. But the other theory I've seen in other areas is you get put on the stupid list. Hey, they fell for it, they got attacked, and so let somebody else is going to hit you later. Really trying to find that out 10 to 20%, not that all that often. So these are things we'd like to hold out in security that may or may not really be true factors. Will your insurance pay for ransoms? Ben's gone through most of that. So bottom line, what I want to leave before we start reaching the end with the recommendations You will have to fix the problems. You have to spend the same in cybersecurity no matter what. Cybersecurity does not cap things. It's not like homeowners insurance where you get replacement value, merely reduces the cost of an incident by a fixed amount. And you will still be liable if you're doing stupid things and you get breached. You don't leave the chicken salad, the egg salad out in the picnic overnight and then eat it the next morning, even if you have something to help you deal with the food poisoning you're going to get. So let me walk through some, sort of get back to work, and then we'll get Ben to sum up a sort of really key point here. SANS is always, when you take our course, what can you do when you get back to work the next day? And RSA has added this sort of next month, 6-month look as well. So the very first thing is understand how does your company make decisions about insurance? Is it the chief legal officer, finance officer, CEO, operations officer? Be part of that. Security should be involved in that, understand existing coverages, and be part of any decisions around cybersecurity or any of those other policies Ben mentioned that might cover things. Get that point across to the people making those decisions. Cyber insurance can only reduce the cost, not cap it. Then I think equally important is to say, are we really capable of self-insurance? Can I stand up and say, here's our gaps. If we close those gaps and here's how long it'll take and roughly what it'll cost, I believe we can avoid these common incidents. And then we only use insurance for what it's meant for. Uncommon things, not everyday occurrences that might happen to us because we were below the level of due diligence or due care. In the long run, it's a jump-starting opportunity to say, boy, I've been looking for a way to sneak in two-factor authentication. This is it. This is how we can get it in. If we can say getting past ransomware, getting past phishing will enable us to avoid all these costs and incidents in cybersecurity insurance. Here's my choice. Here's my chance. And a great way to do that, to work with senior management boards or CEOs, is to do a tabletop exercise.
Tabletop exercise enables the security team to think through carefully, how's this all going to play out when we do have that ransomware incident? And an important part of thinking things through is come to know the insurance team. As I mentioned before, the insurer is going to bring a team to participate in your process of resolving this ransomware event. So there can be multiple phases of a tabletop exercise. There's a tabletop exercise with the security team and the insurance team, and then at different phases, you can involve your executives and even involve the board of directors. But coming to know with some surety what the insurance company thinks its policy covers. So going through different kinds of scenarios with the insurance company's team, saying, okay, so if it looks like this, do you cover that? What are you going to say, insurance team, if we see that the attackers are making this kind of a demand? How do we evaluate, insurance team, the various kinds of risks that are involved with different scenarios? So how do you evaluate the risk if we pay the ransom, but we still have that possibility that will be reattacked or that the data will still be released anyway? So walking through this kind of a tabletop exercise with your team, your executives, but also with the insurance team can be very enlightening. And you'd much rather have this enlightenment before the ransomware happens rather than during the heat of the moment. In addition to thinking through how the ransomware will be resolved, this tabletop exercise can also help to enlighten you and your team on how do we mitigate the root cause and avoid the root cause and actually avoid this thing from actually happening. So all of this leads to a more secure type of environment in your organization.
Okay, with that, that's just about the end of the presentation. I want to leave you some resources for additional information. You can click on any of the URLs there and get great information. And finally, The best way we can all avoid attacks is to get better at security, get more skilled people out there. There's an initiative out there called CyberStart America, where young kids in high school and early college age can get free scholarships and get 2-year bachelors of applied security and get high-paying jobs and help fight this fight. So you see the URL there for CyberStart America. If you have kids or your kids have kids or nieces, nephews, neighbors, friends, whatever, get them interested in it. Let's get more young people and more skilled people in our field. So with that, thanks for attending, and I look forward to working with you in the future.
Thank you.